Welcome back to Switzer. With the market not giving us any strong indications whatsoever, and with the threat of the old sell in May and go away market maxim, what is Lance Lai and his charts telling us right now? What is he seeing? Lance Lai of Accountants Invest joins me in the studio. How are you, Lance?
Very good, Peter.
Good to see you. Where have you been, mate? Like, we never see you anymore.
Been everywhere. Penang.
Because you're the worldwide treasurer for the Entrepreneurs Organisation.
That's right, that's
so
right.
So therefore you have to go around to various countries of the world and have meetings and stuff.
That's right, that's
Travel
right.
business class and all that sort of stuff.
Bring my wife.
Okay, good. That's very good. All right, so we always do this. We look at what you predicted last time, and you're never wrong. This time, yeah, you were a little bit right, but then it turned around on you. But let's have a look at it.
Thank you.
J was where January, I came on the show at 6th of January.
Yeah.
S is basically where we've fallen to.
Little s or big S?
Sorry, the little s on the far right,
yeah,
below the yellow sweeping line.
Yeah.
That represents a fall of 3.9%, which is basically where I said it would fall to. I think we're going to fall back to where the October line is there now. Yeah. That's really only 1.9% lower.
And what's that level, Lance?
That is 5,013, Peter.
Okay, so it didn't get there. We checked it up. The lowest we saw was about 5,050.
That's right.
But as you and I were talking earlier, it then turned around pretty quickly. Did that surprise you, that quick turnaround?
It really did.
Yeah.
And it's not just here, but also in the US. It turned around basically after one more day I came on of falls, and then the next day and the ensuing month, it actually just blasted up.
Yeah, and I can't remember, Lance, but I'm sure there was something that was either said in America or something that made that market turn around on the dime, because there was a fair bit of negativity around at that point in time. So I guess the important point is you saw it fall by 1.9%. It probably fell by, 1% or something like that. So you missed it by 0.9. Big deal. Your direction was right. But what are you seeing now? Is there still an inclination that this market could fall? Or do you think there's a bit of positivity there?
I think it needs to now probably try and top out. I think this market looks like it's going to go to a next level higher.
Yep.
There seems to be a lot more positivity now with some really very key levels holding very quickly.
And they're important for you, aren't they? If the key levels are being holding, that makes you think, oh, there's a lot more strength in this market than I would have thought.
That's right, and in the Shanghai index that's been reflected as well.
That's been a shocker lately, hasn't it?
But look, it looks like it's holding there as well.
Yeah,
and so quite a few of these things, like with the fall of the Aussie dollar as well, that looks like it's been arrested. So there seems to be a turning around of some of these markets. So it's giving me a lot of positive hope for the short term.
Well, an accountant that's positive, that's the sort of thing we like to see around here, Lance. Let's go to your first chart. Sure. And so before it comes up, so what are we expecting to see?
Well, I'm going to put up the S&P 500.
Yeah.
What we'll see there is that the market really flicked up. It went up 7.5%.
So there it is.
Here we are.
Yep.
So you can see on there, F was when I came on the show last.
Is that F because you failed, Lance?
That's the
February.
First time. It was February only.
Oh, the first time.
First
fail in Feb.
That's
ever.
right.
Ever. Okay, good.
So that was when I last came on the show on the 4th of February.
Yep.
Where we are now is at 1,872. It literally turned around the day after. Now this is the US index, and on the clip that we played early, that was the Aussie index.
Yeah.
But they look very similar.
Yeah.
And so what we can see here now is on the chart, you've got a very clean, sweeping 200-day moving average.
That's the yellow line for people who don't understand. Yeah.
It hasn't even.
It's looking good. It doesn't look threatened, does it?
It doesn't even look threatened. That's the clear point of that line. I thought it at least reached there, but it didn't.
Yeah.
And
you would have thought, well, it might reach there, then test it again, and maybe even breach it.
Well, that's right. I thought it might do that, but first things first, I thought it at least reached there, and it hasn't. All it did was it went back to that M level, which was a very old March level that I determined back in March of last year.
Yeah.
And what you can see there is that in 15 months, this index has really gone up over 40% now, as of the high of the 7th of March. And where we're at now is that we're threatening to break that level again of the 7th of March. And I've got a little T up there. Can you see on the top part? Well, that T is 1,947. That's another 3.8% higher. Now, I think when the March level gets taken out, I think we'll go to that 1,947, and we'll see what happens after that.
So your feeling at this stage is that those people who run around saying, sell in May and go away, this chart is not saying it's going to happen this year.
Well, Peter, you know, we're not in May yet.
No, good point, good point. We do have a full April ahead.
We've got a full April.
And you've got a chance to change the tune then, but at the moment it's looking pretty healthy, isn't it?
I think we have a good chance there of just blipping up a little bit more.
Yeah.
You know, I think I've been saying that the markets have been looking a bit toppy, right?
Yeah.
Which we saw the pullback. The pullback happened, but it was so brief. And because it was so brief, then what I think we're looking at now is it wants to go a little bit higher, and then probably we'll see.
Okay, let's go to the next chart. Where's that, Lance?
So the next chart is the Shanghai chart.
Okay.
When that comes, what that will show is that basically that we have held a lot of these levels. When it comes up, it'll show that it's held a lot of the levels where I was fearing. In the last show, what happened was that I was thinking it would threaten a B level, which was the bad level, right? It never really got that low. What it did was it went up. In fact, it went up very strongly. In fact, again, it reflected the US and the Aussie markets by going up strongly. It went up 7%, and then it came off again. And it's come back off to basically where we were back at the last show.
And Shanghai has not been playing ball with the Australian and the US market. It's really had a bit of a negative journey all by itself, hasn't it?
Correct. It's really had a negative journey. I think it looks really as though on the charts that this negative journey may well be over.
Have a look at that, Lance.
Oh, beautiful.
Okay.
So here you can see on the far right, it's 2046.
Yep.
And slightly above that, I think it'll go to the T now.
Okay, so you've had double bottoms there, haven't you, Lance?
Yeah, you've really got, you can see almost a triple bottom.
Yeah, that's right. Yeah.
And so that's always a nice little sign that we may well be over the danger zone. And so with the first level being a T, which is at the 200-day moving average, that's only 2.7% higher. But you know, with this index, I'll take that. I don't want it to be near that B. And then, you know what, because of the positive looking index with the US, I might even say that with the R there, I think resistance is a little bit higher. That's at 2,168, where that little R is, and that's 6% higher. Now, as you know, I only try and look out maybe 1 or 2 months. So it's not a very long-term prediction that I try and make, but I'm positive in the weeks going forward.
Good. Okay, next chart.
So the next chart will be the Aussie dollar. So when that does come up...
Just talk to them and they'll eventually get up.
Right.
It's up.
Hey. Okay. Well, look, we're sitting currently at 92 cents, okay? 92...
We've got a slight spelling mistake there, but still, it could be a new age way of spelling dollar, D-O-L-E-R. Okay, but get to the main point, this one, Lance.
So we've basically, it's at 92.6 at the moment, which is on the far right there, where you can see there's actually a crossing from below
good point.
Through the 200-day moving average. Now, as you know, it's always a nice positive sign in terms of price action that the downtrend may well be over when the 200-day moving average gets crossed.
It's okay for intrepid travellers like you to like the strong Aussie dollar, but business would like that dollar to fall. Looking at this, they're going to need another crossing of that 200-day moving average, aren't they?
Well, yeah, if they want the dollar to fall.
Down, yeah.
But what I was going to point out there was that if you look on the far left of the chart, you've got September 2011. You'll notice that the price action crossed the 200-day moving average from above to below in September. And then what happened was you had a series of crisscrossings, and really in September 2001, that probably marked the end, if you like.
2013.
Well, September 2011, on the far left there, it probably marked the end of where the Aussie dollar was so strong, right? And then what happened in April, it just went up and down, and then what we saw is that in April it went down for the last time, and the Aussie dollar's really fallen off.
All right, so quick summary, what do you think's going to happen?
Quick summary is, I think what it's going to be doing is that it's got a little bit of upside to go to where that little R is, 93.5 cents. I think it'll get up to there. It'll probably take a little sniff back down to the 200-day moving average, and I think going forward, we're going to see a repeat of this crisscrossing across the 200-day moving average.
And what was the R? R was 93.5.
93.5.
Okay. Now we're out of time. Just in summary, what do you see for the ASX 200? We won't go to the chart. We just give us your explanation.
Look, I think with the ASX 200, I think again we've got positivity. Hey, we've got that. I think we've even got the little R, which is up 3%. That's to 5548. And then you know what? It's funny. Each time around this time every year, I somehow come across a chart that might project a longer-term target, Peter. And see the R there? That is a very high resistance at 11.2% higher.
Where is that?
And that's at 5995.
And all I need is 6,000 to be a genius again, Lance.
That's right, Peter.
But that's the charts are actually giving you an indication. That's a distinct possibility.
That is, you know, I don't know if you remember in the very first chart on the S&P 500, I had a projection that was very far way out last year in March as well. And I have a feeling this may well be one also.
I hope you're right, Lance. We're out of time. Thanks for joining us on the show.
Thank you, Peter.
And that's our show for tonight. Thanks for joining me. I'll see you guys tomorrow night.